Welcome to the Sidebar with a CFP. Pierce the veil on BigLaw Life, career, and money. Hosted by Matt Smith, the tour manager for BigLaw attorneys. You bill in 6-minute increments. Let's get you some of that time back. In each episode, we will have candid conversations about life inside Big Law, the real stuff they don't teach in law schools or show in recruiter brochures. This show pulls back the curtain on what it actually feels like to climb the ranks, navigate transitions, and make big decisions in a high-stakes career. You'll hear from partners, associates, and experts across law and finance, each sharing stories, surprises, and strategies for building a life and career that works for you. This isn't a money podcast. It's a Life in Big Law podcast with a CFP in the host chair. The contents of this podcast are purely intended to be general and educational in nature and should not be construed as specifically tailored investment, financial planning, tax, legal, or other professional advice. Any investment performance referenced is purely past performance, which is no guarantee of any future performance. Nothing contained in this podcast should be construed as an offer to sell, a solicitation of an offer to buy, or a recommendation of any security or other financial product or investment strategy. All investment, tax, and financial planning strategies involve risks that you should be prepared to bear. You are highly encouraged to consult with professionals of your choosing before taking any action based on the contents of this podcast. To the extent the guest on this podcast was a client of Concert Financial Planning as of the date of the recording, the guest was not compensated for their time. Nothing conveyed by the guest should be construed as a testimonial or endorsement of Concert Financial Planning, and their experience as an investor or a client may not be representative of all investors or clients. You can find this show on all the major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, Spotify, iHeartRadio, and on our website, concertplanning.com. Now here's the host of Sidebar with a CFP, Pierce the Veil on Big Law Life, Career, and Money podcast, Matt Smith.
Hey, everybody. Welcome to Sidebar with the CFP. I'm the tour manager for BigLaw attorneys, Matt Smith. Thank you so much for being here. This is going to be kind of a technical episode, so some of you may find it interesting. Some of you may find it kind of boring, but it'll definitely be on the shorter side regardless. What I want to do today is just kind of talk to you about a concept that our industry makes complex, but I think that it doesn't necessarily need to be that way. And I think I can kind of illustrate for you a strategy or an investment that is somewhat simple, but is just made to sound more complex when we use jargon and things like that. So today I'm just going to explain what a futures contract is and walk through how it works, why it exists, what we do with it, and kind of give you a little bit of background on it. Now, if you're watching this, you're going to see me turning and looking away from the camera and sometimes looking down. And that's just because where this presentation is on a different screen. So if you're listening, you won't hopefully notice any difference. But if you're watching, that's why I'm looking away. Okay, so I want to give background on a type of investment or a tool that we use when we are investing that is called futures. And that's the first bit of jargon that we're going to have in this discussion. But it dates back to something probably at least 100 years ago, if not longer than that. And these investment tools called futures were created to solve an actual real world problem. So let's say it's 100 years ago, 150 years ago, and you are a farmer in Kansas. And your job as the farmer is to sell corn. Okay, that's what you do. You raise a crop. Let's just pretend it's corn. The way you're going to earn income for your family is to sell that corn. Well, who are you going to sell it to? Well, maybe you're selling it to a guy that owns a factory that is making cornflakes, for example. And so he's in the business of buying corn, and he wants to make sure that if he's going to take the raw corn and use it to produce a product that gets sold to consumers, buying corn and like what price he pays for that corn has a huge impact on his business success and profitability. And so there is a problem here when you have the farmer that is growing and selling corn, and you have the business person who is buying the corn. The issue is that we plant the corn in the spring, let's say. I hope that's right. I assume that's when we plant corn. Don't know that for sure. But we're going to harvest the corn in the fall. And so there is this lag of time between the farmer using his resources, money, work, sweat equity to get the crop planted, to wait for the corn to grow, and between when all that is happening and when he can actually sell the corn and realize the fruits and, I guess in this case, vegetables of his labor. And it's a problem for the business person because the business person doesn't know what price he's going to pay 6 months down the road when they need to buy the corn. And therefore, they don't know how to budget. They don't know how to price their goods that they're going to sell. It just creates a problem for everybody. And so they're both sitting here having these questions about, how much money am I going to earn from doing my work? And how much money am I going to have to spend? What do I need to keep in reserve? What are my estimated profits? All of that kind of stuff. Well, the good news is there is a solution. The solution is that the farmer who is selling the corn and the businessman who is buying the corn, they can sign a contract. And in that a contract, they're going to make an agreement where it says in May, the farmer agrees to sell the corn for $100 per bushel or whatever on October 1st. So 6 months in advance, the farmer and the businessman can get together and say, look, we're going to agree on a price right now for this corn. And that will allow the farmer to know what the profit is that they're going to make, how much they can spend, what kind of resources they can put towards growing the corn, frankly, if they want to grow the corn at all. And the businessman can budget. What price is he going to sell his goods at in the future? What kind of budget does he need for the year? But it's just a contract that they are signing between the two people. And so because of this, now there is a known price for each one of them. And those X's are getting rid of the question mark prices, right? The farmer knows what he's going to get. The businessman knows what he's going to spend. And this is all done by way of their contract. This contract is what we're calling a futures contract. And that's where the jargon comes in. When you hear the word futures in the context of an investment tool, all it is talking about is just a contract between two entities who have agreed on a price to exchange in the future. And this has real world application across farms, ranches, commodities, think like oil. It has implications for the metals market. Think about like nickel or copper or things that need to go into producing consumer goods. Futures are used, these contracts are used to stabilize prices and to serve a purpose. They're going to give price predictability so that each person knows what they're going to pay and what they're going to spend. It gives price discovery because if we're pricing how much are we going to sell the corn or buy the corn in 6 months, what is that price? Well, we have to think about it. Like what do we think the price is actually going to be around that time? Because you don't want to sell it for less than what you should be owed in 6 months. You don't want to buy it for more than what you think it's going to cost in 6 months. And there are some underlying things like inflation, for example, that can play into that. But we don't need to get into math calculations. You just need to understand that having this market of these futures contracts that people can use can have positive benefits in terms of predictability and price discovery. And a third aspect of these contracts that we have taken and used beyond the farm is that there is actually a return to be had by engaging in these contracts. So if we think about our timeline where we agree on a price back in May and we're going to exchange the corn at $100 a bushel in October, well, when October rolls around, what if corn is actually selling for $110? Or what if corn is actually selling in the market for $90? Well, if it's selling for 110, then the businessman at the factory who bought it for 100 by way of contract, they have essentially made a $10 return. If they don't want to use the corn, or if they have excess that they don't need for their inputs, they can go sell it in the market and make a $10 profit. On the other hand, if the price of corn has gone down over the intervening 6 months, or at least below where their futures price is, the person selling the corn has now effectively made a $10 profit over what they otherwise would have made. And so that phenomenon, we Americans are really good at taking things that are fundamentally useful in society and extrapolating that and making it into a financial market. Right. Okay. So that is just the primer on what a futures contract is. It's really not overly complicated, although my industry tends to make it more complicated than it needs to be. And in the next section, what we'll get into in the future is how do we use these in financial markets, where we're not talking about selling copper or buying corn or livestock or various other commodities, but we're talking about investing in stocks and bonds. That will come next. And it's going to be important to sort of expand your understanding of how we can diversify our investments in a more easy manner that is less costly to us and more liquid and efficient. So we'll wrap it up there, and look forward to speaking with you next time. Thanks.
You've been tuning into Sidebar with a CFP. Pierce the Veil on BigLaw Life, Career, and Money with Matt Smith. You can find this show on all the major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, Spotify, iHeartRadio, and on our website, concertplanning.com. Thank you for your positive reviews, comments, questions, and for sharing this show with others. The contents of this podcast are purely intended to be general and educational in nature and should not be construed as specifically tailored investment, financial planning, tax, legal, or other professional advice. Any investment performance referenced is purely past performance, which is no guarantee of any future performance. Nothing contained in this podcast should be construed as an offer to sell, a solicitation of an offer to buy, or a recommendation of any security or other financial product or investment strategy. All investment, tax, and financial planning strategies involve risk that you should be prepared to bear. You are highly encouraged to consult with professionals of your choosing before taking any action based on the contents of this podcast. To the extent the guest on this podcast was a client of Concert Financial Planning as of the date of the recording, the guest was not compensated for their time. Nothing conveyed by the guest should be construed as a testimonial or endorsement of Concert Financial Planning, and their experience as an investor or a client may not be representative of all investors or clients.